Good evening, everyone. Just wanted to check in really quick, do a little update on what I'm seeing with our positions, and also show you guys a couple of opportunities that could be in front of us. But I hope everyone is having a wonderful holiday season so far. Good Christmas. We got New Year's coming. This Christmas has been actually really nice. I didn't do anything, and it was spectacular. Just hung out with my family, and there was a lot of precip here in Idaho, snow and fog and freezing weather, but it was actually quite beautiful. The slopes are packed with snow, so I definitely want to get on top of that. But hope you guys are having a good one and resting, and hopefully getting time to spend time with your family as well. Um, this week, just like last week, I'm expecting it to be slow. We did have an update in the market today, but that was almost 100% due to the fact that Trump did end up signing that bill. So the second relief package is underway. And I think I just saw some reports that the House approved that $2,000 additional bonus to everybody making under 75,000. And now it's got to go to the Senate. We'll see if the Senate holds it up. But either way, the relief package is coming, so the market is loving that. And the additional money in people's pockets are just going to see, we should see things just continue to go higher. In what time frame, I don't know. But this week, again, volatility expectations are low. We do have a normal trading week outside of Friday. So normal trading hours the rest of this week up till Friday. But the following week with the new year, that's we should see things start to pick up. Usually takes a couple weeks, but anyways, this week, take it easy, rest. Let's do this quick update. I'm going to go ahead and share my screen here, and we will get cranking. All right. Okay. So first things first, just taking a look at the S&P 500. One of the only things I wanted to show you guys really quickly is divergence. We've talked a little bit about this, and we'll continue to hone in on the skill set of identifying divergences. But in simplest terms here, we can see that the market is diverging from our leading oscillating indicators. So on the both the MACD and the stochastics, to the indicators that we use in our group for stocks, are going in different directions, as you can see here, than what price is doing. So we've got highs and lower highs on both indicators, and we've got highs and higher highs on price. So when we see these kind of things, we have to think caution, 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 because that's typically a sign that we're a little bit in overbought territory. So we want to be mindful of that. We're seeing these. That doesn't mean the price won't continue to go higher. But when we do have a divergence like that, we in previous history, anytime you can see indicators giving us that slow reaction to a potential sell-off, be mindful of it. Potentially, if you're looking at going long in certain positions, unless there's a good technical play here, be cautious. So that's the S&P 500. Pretty much the same thing across the board. Same thing across the board here. The Russell 2000 is just out of this world. It's been showing divergences, a divergence for the better half of a month. But the VIX is staying low. It's holding the support level. It looks like it's starting to it looks like it's starting to set into this channeling pattern. So whether we stay at the support level or in between this channel, that's a good sign for stocks to continue to rally. Let's take a look at the dollar index really quick. This has flattened out just a little bit here. We can see that price has found some support, and it seems to be stabilizing. Even if price were to continue to flatten out a little bit, I would still expect to see a bearish outlook for the US dollar. When you have the Federal Reserve announcing that they are planning on keeping rates at zero toward negative for the foreseeable future of this year, obviously this year, 2021 and 2022, not looking to make any major movements at least until 2020, 2023. That is very bearish for the US dollar. So even if we see some upticks, overall sentiment is bearish on the dollar index, which plays a lot of role into our Forex pairs that we're watching. But let's go ahead and take a look at our option positions. We've got American Airlines. It is staying pretty even keeled here. Let's go ahead and open up our tracking list here. So you can see right here that we are short American Airlines on the January 8th expiration. We went short at 16.50. We got a $1 spread there. We did make 46 cents on that, so 46 bucks per contract. So right now price is just a hair below it, and that's perfectly fine. Price could even start dropping down here. That works too, because if it does do that, we'll end up getting assigned the stock, which is absolutely fine, and we can take advantage of it going lower by executing our long puts first and then holding on to our short put, which would in turn most likely get us assigned the stock, which we want to own, which is great. Let's move on to Bed Bath & Beyond, which is the other option position that we're in right now. This one, let's go ahead and move this over here. Oh, there we go. This one is holding strong on this support level right here at about 1850. And this pattern is starting to look more like we might break support, but I'm not holding my breath here, because this is a wedge pattern. And we should see a breakout on the top side based off of this pattern. When you see things like this making lower highs, typically we see a breakout to the upside, but this could be easily breakout to the downside. So we'll see what happens here. But as long as we're staying above, let's go take a look at our spreadsheet here. We sold the 18 and bought the 17. This is again a bull put spread. So we're looking good. We're looking really good on this one. If it, again, like I said, if it does break this, perfectly fine with owning it, make a little bit of profit on those long puts, and then we will hold on to those short puts, get assigned, and then we have a whole plethora of options after that we can explore with this trade. So I'm really excited about this one. One of the other trades that I was looking at, there's a couple of opportunities here. Macy's retail all over the board had a pretty incredible day today. Check retail stocks. A lot of them had pretty incredible days. This is a position that we actually had as a group. I hope some of you were able to get into it. I'd have to go back and look at that. But this was a bull put spread on this one. The price that we had sold it at, I believe, was 11 and bought the 10, shorted the 11, bought the 10. By time expiration actually happened, it was below our 11 strike. So we ended up closing this for a profit, getting assigned the stock, currently holding the stock. And you can see right now, if you get assigned at 11, it's up at 11.66. So you're making 66 cents a share, or 66 bucks, 100 contracts, right? So this is a good one, but future potential, I like this one. We have a lot of opportunities to get in these higher levels, right? A lot of opportunities, just barely breaking above this neckline, and it's starting to get some traction on trending above it. So we want it to trend above this resistance level here. So we'll keep an eye on this one. We might have another trade opportunity coming up here shortly. Maybe holding or shorting the 11s, buying the 10s again. We'll see. This is on my radar. A couple people sent some stocks to me that they wanted me to review. Let's see here. It was Ulta and Apple and TJ Maxx. Yes, that's right. Okay, so let's bring up Ulta really quick. ULTA. Okay. Ulta, I've been watching this one. I actually mentioned this a little while back. This stock has been out of control on the spreads. So it's been something that I've been wanting to trade, but the spreads have been off the charts. There is a ton of technical pattern setups on this, tons. So this could be a potential stock to buy and hold. But in terms of optionability on it, let's go ahead and take a look at that real quick so you can see what I'm referring to. ULTA. Let's go ahead and delete this. So what I'm referring to is just looking at the January 8th. Let's go ahead and close that and jump over the January 22nd. Give us 25 days here. Take a look at this. This is just single contracts, right? If we were looking to, get some premium out of this, buying and holding long, which, we typically don't do, but if whatever we're trying to do here, we've got a problem. Our rules tell us that we want to stay within roughly 30, 50, 60 cents, right? Of spread between the bid and the ask. Look at this thing. This thing has almost it has a $3 spread. Way too big, right? This is going to be a nightmare in terms of getting filled and trying to get out of it. So this hasn't changed much. The spreads on this are really wild. If we take a look at verticals, our bull put spread strategy that we do, this has a $7 spread. Look at this thing. Minus 260 plus 530. This is completely outside of a rule set, so we can't quite do an option strategy in this, but there is a lot of potential on this one. If you zoom out here, we have tons of targets on this that we can try and capture. We've got this massive gap right here that is already on its way to filling, right? We're about halfway in between. So we've got target number 1, target number 2. Lots of targets on this. We're currently trading at 278. First target's 302. Second target is about 330 roughly. So we've got lots of different targets that we can try and attack here. But this will, for right now, this will be a buy and hold stock only for me. The next one was TJ Maxx, TJX. There we go. This one has made a nice run. This pattern that I drew here is it could be an ascending wedge pattern. When we see an ascending wedge pattern, we typically want to look for something like this: up, down, getting narrow, and then something like that. So that being the case, look for that. In terms of where it is right now, it's kind of already made its run. The risk to reward on this, the risk is a little too high for me. So I'm going to wait for this thing to start leveling out. It could continue to run, or it can play out like I just shown you here. So if it does do that, that'd be a great opportunity to maybe try and get in down here. We'll definitely keep our eye on that one. Last one, Apple. I actually talked about this not too long ago. I said, keep your eye on this wedge pattern. It broke, retested, and has not looked back. So that was a really great opportunity. Apple spreads are not bad, I believe. I think I looked at it, didn't I? Yeah. See, these are good spreads, right? We have a 10-cent spread, right? So the volatility on this, the implied volatility is manageable on this one. Or sorry, not the implied volatility, but just the volatility in general. And the other one, the implied volatility was no good in terms of premiums, right? So look at this one. We got 10 cents, no problems on this one. Obviously a no-brainer. This is the most traded stock in the world, one of them anyways. 124 million shares today alone. I think the average is 80 million. So the spreads are typically going to be a little bit easier. Where price is now, where it is right now, it's made its run on this pattern play. So we missed that opportunity. If you didn't get in when I was talking about that, you missed that one. That's okay. There's going to be a ton of other opportunities at its current price. It could break out. It's made its run. If it does break out, I'm going to want to see this move in a fashion similar to what this did, where price went up, broke out, contracted, retraced, consolidated, and then made its move. I'd want to see the exact same thing here. A breakout, consolidate, then make its move, right? So in terms of that, that's what we're going to be looking for on Apple. If anything, if price can hold right here, we could be looking at a different strategy on that as well. We do have a couple of Forex trades going on right now. Definitely one. The Canadian dollar, Swiss franc. Our entry price on this was 68.90, and we're roughly up about 30 pips. So that's good. This is a long-term trade. I am expecting this to do a lot of ups and downs, but we got in a good entry level. I'm not ready to move my stop loss to break even because I want to give this room. If price can break this sideways movement that we have going on here and can start trending above these highs right here, then we'll move our break even to, then we'll move our stop loss to break even, and we'll start to look for additional areas to add. So for right now, we are just sitting on our hands and enjoying the profit that we're in. There is some other opportunities coming up here, guys. I'd mentioned that with the dollar potentially strengthening, we'll see. But let's take a look at the euro dollar really quick. I have an alert right here. You can see that I've placed it right at about 21.80. The reason I have that alert set there is because if we do get the dollar index to make a short rally on the bullish side, this thing is going to break this support level. And there are two targets that we should easily hit. Target number one is right here. Okay. We should easily come down to about 20.50. That should be an easy target to fill. So if we get a break of 21.75, we're talking about a range of about 100 to 125 pips on the table to be profited from. If it continues, the index continues to rally, try and reclaim some of that lost ground before it continues to be bearish, which most likely will happen. Our next target is roughly about 1950 to these previous highs right here, so down here. But as you can see, that would be a pretty decent size sell-off, right? From there all the way down to here. So I'm not expecting that. I'm preparing for it. If we do, be ready to short it right around this area. This could also just be bouncing off of this, making its way higher. We are not going to be looking to trade this if it continues to rise, because the risk to reward on this is a little too high. Because if we were to buy, I would have to put my stop minimum down here, right? So that's roughly about 200 pips. I don't like that because I typically want to see a 1.5 to 1 for minimum of 1.5 to 1, 2 to 1, things like that. So that means that 1.5 to 1, we would want to see this rally an additional 300 pips. I don't think it quite has that. You never know, but that would mean rallying all the way up to here. That's quite a bit of a move to not make some adjustments down here. So in terms of this, I see a potential sell-off. So go ahead and put your alerts here on this one. There's a few other pairs I'm looking at. The Australian dollar, same kind of situation. I actually want to move this up to here. There we go. There is my alert on this one. Pretty much the same setup. This one has a lot more potential to continue its rally because it kind of already did adjust here. You can see the sell-off right there. We talked about that. But it's stalling a little bit. It is stalling a little bit. So we'll see what happens there. Euro yen, this is a big one. It's starting to break out here. It's been consolidating for a while. Now, this only this will only work if we continue to see rally in the market. This has been kind of flatlining, and we saw a rally in the market today. Well, we've been rallying in the market, and this has been staying flat. Let's take a look at that real quick so you can see what I'm referring to. We take a look at the S&P 500. It's been trending up, right? Well, let's go back. You can see clearly trending up, high, low, high, higher, high, low, right? Let's go back to our euro yen. And you can see while this was trending up, the S&P, this was just sideways, not doing anything, right? So we have a breakout here. We want to make sure we stay away from any potential fake outs. So even though this looks like it's getting ready to make the move, I want to see this move up a little bit, then come down, retouch before I jump into it. I'm not overly anxious to get in at where price is now, even though it's making that breakout, which is a confirmation. The risk on it. I'm always talking about risk to reward, right? This thing, we would definitely want to give it plenty of room. So we're talking about roughly 150 pip stop. And if I'm looking for my 2-to-1 ratio, that thing needs to move all the way up to here. I don't know if it has it in that. So let's be patient on this one, but those are a couple pairs to put on your radar, guys. Put your, go ahead and put your alerts, move them up to here. If price can come back to this area and hold, we should be looking good. So this is a good one to be watching. That is all I have for you guys. Let's see here. That's all I have for you guys. I hope this was beneficial to you to just do a quick recap. Enjoy your week. Keep your eyes on the market. Don't expect to see a lot. We'll be back in action next year. Keep looking out on the chat. I will be throwing stuff out there. Other than that, if you guys have any questions, if you were looking at any stocks, any currency pairs, definitely be throwing my way. Thanks to the people that did send some stocks. We do have some opportunities there, and keep sending them. Let's build some opportunities for 2021. More fun in 21. All right. We'll see you guys soon.